So I decided to eat some food. Normally I watch a show, but right now I felt like I'm gonna be more productive. I have a lot of, you know, goals that I want to accomplish, and I'm very serious about this stock goal because I think it's gonna be huge. I think the ability to make a big return on your investment, like where else are you gonna find like 100, 200%, 300%, like 1,000% returns in this market, in this world today? Like, you can't do that. I'm not sure. Like, probably do that with real estate, but like, I don't know. It's just like it's very easy to do. The public has access to it, and it's more accessible to people. So this is a very easy way to make a lot of money, in my opinion. Um, so I have my computer over here. I don't know if you can see that. Can you see this? Is it moving? Yeah, you can see it like very faintly. It's moving up and down. And the reason for that is I'm searching for news for OEG because it went up on October 7th. This is a part of my backlog. Fortunately, this is have 1 minute data, so I'm very happy about that. And yeah, so I didn't see anything that popped out like news that would cause it to jump like this. But what I did do was, so with my stock selector, um, excuse me, with my stock selector, I look at all the percentages. You know what? I should show you. I'm gonna pause this script. So I look at this. So that. All right. Now, one thing I noticed, it kind of looks like scribbles, okay? But when you look closely at it, you'll notice that the brown line, which is OEG, this one, it has a nice upwards trend, and it doesn't have too much pullback, and it just keeps going up and up and up and up and up. And then I wanted to choose this stock based on that factor, based on this behavior. If you look at the other stock, you see that it goes up, it has pullback, and then it goes up again. But it doesn't rise. I don't think it rises as much as, actually it did. It rose a lot too, but it did not rise as much as OEG. So I'm coming to the conclusion so far that the better stocks to invest in, if you're bullish, you're going to want less pullback because less pullback will mean more people buying in. That's my perspective thus far. That's awesome, right? So number one, you want a top gainer. Number two, you want less pullback and rising support. And less pullback is going to mean rising support if you're going up, right? Pullback is just movement in the opposite direction. All right, let's get to it. So there is a big good sign over here, and you can see that it rose. I don't know what's the percentage it rose from there to there. So from here to here. Let's see. I can't actually. Was it ever at this level? Jeez, it was like never at this level. Anyways, we'll just do it like this. So 20% from a 20% return to 50%. So that's where the super trend came in. It came in over here actually, from 15 to 50. 15 to 50. 15 to 50%. That's awesome. And you want to get in a stock that looks like this. Like SMA is constantly going up. That's a good, and like if we're going to look at an EMA, I'll go like this. EMA line of visibility. So yeah, constantly above EMA 50, dives in a bit and then just moves up. SPI was a lot like this. It was just like not touching, I forget which EMA it was or SMA it was, but like it basically never touched the EMA lines because I was relying on that day. I got destroyed. I didn't get destroyed. I just never got in it because it almost never came down and touched EMA lines. Like many stocks will use the EMA lines to bounce off of, but SPI did not do that. It just ran. So unfortunately for me, I studied every single stock that was unlike SPI and almost, yeah, I still regret that day, jeez. But that doesn't mean EMA is not a useful tool at all. I think it's awesome. And you can see here that the super trend is right over here. A lot of people start buying it over here. Okay, so I talked about that. I talked about how a great time to get in would have been over here, and also to get into a stock that has a upward sloping SMA 200 or whatever it is. Probably SMA 200. I think that's what this is. MACD. Okay, so actually, you know what? We can just double check. This is EMA 200, so, and it's constantly on the diagonal rise. And then the EMA 50 is, you know, mostly, like, it squeezes over here, but then it just jumped up. It made a lot of room over here. And then peaked over here, and then resistance starts to fall, support starts to break through the slanted support, and then it just resistance starts to fall, and you don't want to be in that. So it's funny, you want to get into stocks that have, like if you're bullish, if you're a long trader, you want to get into stocks that have rising support, and you want to stay away from stocks that have falling resistance. Is that true? Yeah, that's true for this part. Well, rising support and rising resistance is good, and then falling support and falling resistance is bad. So upward slanting support is good, downward slanting support is bad. So like here, downward slanting support, upward slanting support. It fell once, but I mean, it just kept on rising after. Like, I find that slanted support, it changes the angles, but if it's positive, it's positive, so that's good. So that's it for talking about that. Next, I want to talk about the MACD. So I'm going to turn on the AOI, momentum algorithm. There's a lot of signals, and that's not bad, but I don't want to think too hard. If I see like a lot of signals like this, I mean, it's not that if I see a lot of signals like this, I find the 5-day trend will, like, the longer you go, the less signals you're going to get, the more simple the graph will look, or the chart. What would I say? I would say it did go over 0 here. It's hard to see, but here, much easier to see now. So RSI, MACD path crossed over 0 over here. So this is a good time to get in. It shows some resistance over here. I mean, technically, you could buy a stock just looking at the MACD. You wouldn't even have to look at the stock price. So if I did this kind of thing while I'm looking at a stock, that works. So it's uptrending, and this is very interesting about my indicator, and as well about the little histogram that comes with MACD. The little histogram, I've actually included it in this, and you can see that it's green here, green here, green here, green here. I'm tempted to pull up like a regular MACD. I could probably do that for you guys, and I guess I will. MACD. Okay? This is for you. So, I'll show you how it compares to my MACD. Not huge, just no signal line. So, I guess I do include signal line because technically the histogram is the signal line. So see how I said that I'm telling you right now that at 12:53, the stock is in an uptrend, but this is a down moment of that uptrend, and I've seen this before. So you're buying at a low during an uptrend. Amazing time to buy, amazing. I've seen this before. So 12:52, okay, or 12:52.3. Take note of that time, okay? 12:52.3. So now at 12:52.3, you can see the histogram is showing you it's saying negative, but MACD was above. So this is an awesome time to buy it. Now let's look at stock price, okay? 12:52.3. Look at 1252 and 3. Look at that. These are awesome times to buy. So I'm glad I showed this to you. And honestly, I'm a bit afraid sometimes when I see that. So, for example, at the end of an uptrend, you know, end of an uptrend, it can signal an end of an uptrend. But when it's the first wave of passing zero, it can be, you know, the very start. I'm not saying this is all true all the time, but it's more, I feel like it's more negligible at the beginning. So first wave, second wave, third wave. So it's more negligible during the first and second wave. And if I go to the regular MACD so you can use it yourself. So crosses zero. First wave, 1. Second wave, 2. And yeah, third wave was not negligible. You should not have jumped in over here. So yeah, that's my advice on when to buy in. Using that information, I can start to mark my buy points. So 1252 and 3. I would have bought in there. Make it green. And what was the other buy point? It was here or here. I would have bought in, not here. I probably would have bought in here at 1328 or even 1325. So I'm kind of like risk averse, right? So 1325. So I would have bought in here. It's not a horrible buy spot. It's pretty good. And then where would I have sold? That's a good question. So first question I want to ask myself is, what is the RSI at which I bought in? RSI was about 50, the first one. RSI was a bit more than 50 in the second one. So I'm trying to beat 50 over here and beat 55 on the second. So I immediately beat 50 over here. And I probably would have been tempted to sell here, to be honest. But if I was waiting for MACD to go above, it's kind of dangerous. If I was waiting for MACD to go above, I mean, I suppose it's not dangerous when it's a first wave. I feel like first wave is the most negligible to hold on to. Especially if that wave is small. So it's worth holding on. Yep. So let's say I hold on. Wave's down a bit. You get a sell signal, you get a buy signal. I would have tried to sell over here. And that's 70 versus 50. So I would have been very happy with 70 versus 50. I would have tried to sell over here. 70. And the reasoning is, I think when MACD Hill is low, you want to aim for a lower end RSI. Like 70. A high RSI, but for a low MACD Hill. And then for a higher MACD Hill, you want to aim for a higher RSI. So 80 or 90. I would say 80 is very high. So look, even I called that before I even touched this. So I know my RSI numbers. Yeah, 80 is quite high. It's totally fine. So that was my first trade. Okay, I would have waited, and because you know, I just traded. I'm fine. I'm happy. Made money. I wonder how much I would have made. So let's look at absolute values. So from 9.9 to 0.8. That's not bad. That's pretty good. That's like more than 10%, I think. That was really good, in my opinion. Okay, it's not the best, but whatever. It's really good. So I have another buy-in here. Okay. The question is, when would I sell? Traditional MACD tells you to sell over here, 1.14, which is pretty freaking solid sell point. But I already know that my RSI is 55, and I'm trying to sell, um, uh, like, because the MACD is growing, I'm gonna like kind of look for something over here, something at this level. This is very like optimistic because uh, resistance is rising and support just fell, so that's kind of like, did it fall under the previous support? Technically no, 'cause, yeah, you have to look very carefully, but technically no. It's generally going up, so it's going up, holding it. I'm holding it. I'm holding it. I'm holding it. I probably would have thought I should sell it over here. If I had missed a sell, I would have sold it here, but if I didn't miss a sell, I would sell. I think I would have to keep track of the RSI and wait for like 80. I don't think I would use 70 because it was 70 over here. I think I would look for like a higher RSI based on the hill, and I guess I could have paid attention to these two things. I would either sell here or I would sell here. And I want to sell while volume is kind of very high. So you can see that there's some volume surges here, or there's a volume surge here. So you can sell on the good volume surge if you want. Or technically you buy in on the good volume surge. But I think if you want to just like take your profits, which I think is a safer thing to do, I would sell when either here or here. Because I would be looking at RSI, I would looking to beat it, and I would see that RSI is 80 over here, and RSI is 80 over here too. But if I were to pay attention to rate of change, I would see that rate of change dropped, right? And then I would have to wait. Because I don't want to sell, if I were to look at our rate of change at the same time, I wouldn't have wanted to sell here because rate of change is peaking. And we don't want to sell when rate of change is peaking. We want to sell when it's peaking and falling below its peak. Because then you can kind of assume that it's the rest of the way will fall. Just like the rest of the way of this, from here to here, rate of change is no longer at a high, and you can see the space between the rate of change and its high just like filling up, like, and getting wider and wider. So I would have liked to sell probably around the original MACD where it told you to sell over here. I would have tried to sell like probably, I think I would have preferred to sell over here, but then maybe over here or here. Here would have been amazing. So I'm going to have to try to get used to looking at all my indicators because they all provide some sort of value, like especially rate of change. Like I love rate of change. So, and then another thing is like price weighted volume said to sell over here because it also fell from a high and it was also crossing the average. So I have an average level and it was crossing average, and that's like a very strong sell signal for me. Another strong sell signal for me is also over here when it's crossing the average as well. But then, I mean, traditional MACD, it's so funny that it didn't cross over here, and that's kind of a hold signal, so. Oh, definite hold signal. Maybe I should add the signal line. I wonder. That's something I might do after I finish making this video. Okay, so I think that's all I wanted to talk about. Was this a multi-day runner? Oh, the last thing I want to talk about, which I did not talk about, sorry, I'm like messy, was my Ichimoku. Yeah, I wouldn't have sold there. I would have sold here. Or here, or even here. Knowing me, I probably would have sold early, I would have sold here. But oh my god, super trend is crossing right there. How could I not like pay attention to that too? Wow, I definitely would have tried to hold. And I know that they don't always cross, but if they do, man, that happens. That's huge. So this is interesting. Let's look at, because I always look from Ichimoku cloud perspective. So it would have been under the clouds over here and here, but it also would have been over the average low, average support level over here, and that's where I like to buy in. I don't buy in like at this level because stocks tend to continually drop when they reach their average. So you can even see that that my code knows that this is the buy-in point for price-weighted volume. And then there's a judgment here. That's interesting to know because normally I think like, oh, you know what? Sorry, there's a judgment here. Well, it's because I didn't rewind. I didn't rewind. Let me rewind. Oops, that's the wrong button. Here it is. Let's rewind. And we'll start to see, it's too far away, please select it. Wow. Wait, what? We're back at November 20th? Damn, that sucks. What if I do five day? Damn it, I don't want to do that. I'll just use my brain, okay? So, I'm gonna go back. November 17th. Yeah, so I'm glad I looked at this stock. This is it's important to be able to select good stocks, and I wasn't aware that less pullback is a really good thing. I mean, common sense, yes, I'm aware of that. But how much common sense is there in the stock market? Not much. It's things like, it feels like everyone's speculating. Nobody knows what's going to happen. I'm looking at October 7th. Wow. If you keep an eye on a stock that makes you money, damn man. Look at that. That is insane. What is that, from 1? Yeah, that's double. That's 100% return right there in pre-market the next day. Based on the fact it was hot the day before. Multi-day runners. Yo, multi-day runners. Multi-day runners is so important. It did rise a bit. It had a new high. And then we can't see the history because it's so old. But it's not so old just by trading view standards. Okay, so what am I doing for time? Wow, this is already a 23-minute video. I think I might like go back and make a shorter video. Yeah, I think that's what I'm gonna do. Or not. I talked about a lot of good things. I don't want to like go over everything. I might miss some of the stuff I talked about. Let's see. What did I want to do? Oh yeah, this. So I will describe what's happening, okay? So, at this point, the score was probably, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you would have had a 10 here. So I would have known that it hit the upper bands 10 times. And then I would have seen 2 times. So now it's 10 versus 2. What are you going to do? This indicator would have given me the best buy-in point, because when it says judgment, I kind of have to make a choice. So I would have tried to buy in over here, 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 and yeah, I would have said 10 versus 2, 10 is greater than 2, I'm going to buy in based on my judgment. I prefer to buy in on a lower than a higher, obviously. So let's say I buy in over here. Oh my god, you know what's horrible? It shows that it's the beginning of a downtrend. Wow, that's horrible. But you know what? There's going to be waves and everything, and I've noticed that these clouds are not 100% accurate. And by that I mean like, just because you have a downtrend cloud, the thicker it is, the stronger it is. The thinner it is, the less strong it is. So the only reason I would have been willing to jump in here and see, like, I think it would have given me some, what? There's judgment here, and then it would have given me, might have given me some numbers here, like 1, 2. And then, like, obviously it would have given me a ton more here, and it just would have continued. But, I would have held till 20. And I'm pretty sure this is like a 20. I can't show you, but, if you had counted the number of times it hits the bands, the upper bands here, around 20 usually stocks, they just fly up and then they fall. I'll show you what I mean. So look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, and then it goes up to 21, 22, 23, 24, 25, 26, 27, and that's it. 27. Hit the bands, upper bands 27 times. Normally, stock will fall around 20 times. Like it will last like 20 minutes. It can go to 30, it can go to 40, it can go to 50. I've seen it go to 60. But this is more rare. And this is kind of rare too, 27. I find like 20 is a very common one. I can usually call dips by 20. And if you had called it over here, you would have been smart too. So that was my kind of Ichimoku cloud analysis. And this is going to hold me back, but it's not going to hold me back any longer because now I know, and it's true. If the negative cloud, like Ichimoku cloud, is thin, feel free to jump in. Don't be afraid. Because, look, here's the head, or sorry, here's the tail, and here's the head. This is kind of risk-free zone, okay? You're making less money. Look, 84 cents versus 79 cents, or versus 82 cents. So 83 cents, 84 cents, 85 cents, and then you could have caught it on the bounce here at 83 cents. It barely, like, it did touch. It touched here. So this is like safe zone, I would say. I think this is probably the safer buy-in point. And because it's safer, you're losing 1 cent. I would have tried to buy in over here, to be honest, now that I think about it. But you have to be lightning fast, so make sure your hotkeys are ready. Yeah, so I would have switched my buy-in to there. And at least it's still in, you know, strong buy zone. Price is rising, and it drops a bit over here, so that's good. I don't like to buy around these yellow clouds because stuff like this can happen. I don't want that to happen, man. So, yeah, I think I would have gotten at the very beginning of the uptrending Ichimoku cloud. And yeah, if I was greedy, I could have gone for over here. And then it's like 80 cents versus 83 cents. Big whoop. At least I don't have to take the risk of this. Yeah. Okay, so I just showed myself how to lose money, kind of. But I mean, I showed myself less risk, too. So I said that this was a safer buy point, the bounce. And, I mean, rate of change is well above 0 at this point. I can't kind of see anything. It's hard to see. Falls, goes negative for 1 second. It's a weak sell. You can buy during a weak sell, and you can sell during a weak buy. Yeah. I think that's all I have to say about this chart. I'm glad I looked at it. I learned a few new things. I may add signal line to this. I haven't thought about it for a while, but I like the fact that the signal line like really weighted it out. And I'm always looking at slope. But RSI is super important. Oh, look at the RSI over here versus the RSI over. Can you show me the clouds, please? RSI versus over the RSI over here. I mean, they're both good. They're both probably 45. But yeah, so that's my 2 cents on that. And peace out. I hope you enjoyed the video. That was OEG. OEG is still hot. Like even I think it was not yesterday, on Friday. It was booming. And okay, so I'm gonna be very quick. I'm gonna look at the next day or not next day, but the pre-market. So you see that support's rising, resistance rising, support's rising, resistance just get destroyed, like broken, keeps breaking. I always say that if resistance continually breaks, you want to get in. If resistance breaks slowly, you want to wait. And I don't always say that, but like I remember I talked about that a while ago, and I was saying that there's a time and a place to chase, and when resistance is constantly broken, you chase. When it's periodically broken, you wait. You don't chase. Damn, I wrote this down, and I expressed myself way better in the trading floor, in the Discord. I'll show you what I mean. In lessons. So let's go to lessons. Stock. Trading floor. So I said, I have found the more a stock periodically breaks resistance, the more chasing is a bad idea. And by that, I meant this. So resistance gets broken here, waves up. Resistance gets broken here, waves up. So, so resistance was broken 4 times over 4 periods over 4 waves. Or was it 1, 2, 3, 4? I think that's actually 3 waves. So 1, 2, 3, 4 kind of thing. 4 mini waves. I don't know. Either way, you get the point. So the more it's breaking resistance, the worse it is to chase. So if you had tried to buy in over here, that's a bad idea. But if it I know, this makes me think that a wave is not this. That's like a little wave is negligible. But if a wave goes up and down and up and down, like this, up and down and up and down and up, that is not negligible. That's a wave. So you would want to chase it over here, and then the larger the wave, the less likely you should be chasing. So yes, there's profit here, but like the profit from here to here is much better than the profit from here to here. I think. Yeah, I think so, for sure. It is better. Always better to get in early. But you still want to hold in. You still want to hold on. Alright, super long video, apologize, but there's things I wanted to talk about. What else can I say? I talked about this, so like, you know, and then I said, let's see, I said, you don't want to be buying at the high of the day. Was my comment removed? I have no idea. Oh, I said it wasn't removed. I said, I think the exception here is that if a stock continually breaks support, then chasing is a bad idea. And if the stock is continuously breaking resistance, then chasing is a good idea. So if you had gotten over here or here, because resistance is constantly being broken, you could have sold here or here, which is great. The only thing is, like, the longer the line is, I mean, not the longer the line is, but, I don't know. I would say that these kind of spikes are short-lived. So you have to be careful. In general, they're short-lived. Like this is a short-lived. There's a lot of downtrend here. So I would have been okay with jumping in over here and something like that. So I would have seen something like this. It would look really scary. Oh, that sucks. And then I would have lost money over there. RSI was really high. It's hard to beat 89. Like I usually do that. I look at it. I look at a stock, and I'm like, oh, RSI is way too high. I'm not getting in that. But like for a really hot stock or really good news, RSI does jump very fast, especially with computer trading. So, anyways, you had to notice that it was. You had to follow it. You have to follow the stock in the previous day and knew that it was a top gainer or it was like a hot stock with nice support and not too much pullback. And then you look for it during this after hours or pre-market, and let's say you notice a jump and it falls back down, but it doesn't fall back down too low, so support has risen. So you'll try to get in it. You'll try to get in it and you'll keep track of your RSI. So let's say it's 50 and you're trying to beat 50, and then like MACD is pretty low. MACD jumps up really high, and because it's really high, you're looking for like 80 or 90. So it reaches 90, I would have looked for 85, and I would have sold it. So that would have been nice. And then because like if I had done that trade, because that is an amazing trade from 1.18 or whatever to 2.4, that's incredible. You take your earnings and you run, you know? Like you can watch the stock for sure, but you don't like hang around after you've made a lot of money. Over trading is such a horrible thing to do. And another thing is like for a super spike, it's going to be like you watch the resistance levels, support levels. Yes, they're rising. You could definitely trade on this, but then afterwards it's all downhill because, you know, I don't know if you guys have looked at a momentum indicator, like straight momentum, just momentum. Stocks cannot just continually go up. Like they're not cannot, but it's harder for them to continually go up. They need to go down so that they can go up. So that's why you see kind of this behavior. What else? I think that's it. I covered everything. I hope you enjoyed the video. I didn't cover everything, but like I did my best to cover what I thought was important. Oh, one last thing I'd never talk about is stop loss. So I would say a healthy stop loss is your purchase price or below it. I mean, a healthy stop loss is your purchase price, okay? Because if you get in a stock, I've said this before, if you get in a stock and the trade doesn't go your way, you've made a mistake. You should be executing your stop loss, or you should be selling out at the best possible price, like as soon as possible, as soon as it shows up, because you're a bad trader. You didn't predict correctly. So, I mean, you're not a bad trader, but like, you made a mistake, okay? So, I would say, like my stop loss for a good trade, not a good trade, but like a stock I really see potential in would be my purchase price. So, and that would have been totally fine here. It would have been totally fine over here as well, because it's a calculated trade. These two trades would have been perfect, and the stop loss would have been like entry price or like maybe a bit below, like 95%, if you're really, you know, not desperate, but like if you're not sure, 95% of your purchase price, that's fine. So even here, yeah, I mean, that's great. You know what, sometimes if you're in an uptrend and your stop loss gets not executed, but like it gets triggered, your mental stop loss, obviously, you're doing this in your head, then you can look for the best selling point as soon as it happens. And let's say that best selling point is over here at 1.86, because let's say it drops and you bought in at like 1.57, and it goes to 1.45, jumps up to 1.9. Take it. Take the profit and leave. You just made a semi-crappy trade turned into like a profitable trade. That's amazing. So that's what I have to say about that. I'm going to stop recording. I feel like I covered many angles. Peace out. Enjoy. Have a great day.